All right, let's get right into it. For years, Palantir was, one of the most talked about, most controversial companies out there. It was this tech giant that grew like crazy, but was just burning through cash like a furnace. Today, we're going to unpack its incredible financial turnaround. And I mean, it is dramatic. We're going to chart the journey from a highly speculative bet to a legitimate cash cow. So, the story of this transformation, it really boils down to three massive shifts. First, they somehow managed to maintain hypergrowth, scaling revenue from just over $1 billion to nearly $4.5 billion. Second, and this is the big one, the profitability flip. We're talking a staggering swing from losing tons of money to being consistently profitable by the book. And third, building an absolute fortress of a balance sheet with over $7 billion in cash. We're going to break down all three of these right now. We are about to get into the nuts and bolts of Palantir's entire transformation slide by slide. If you're into deep dives that actually get straight to the data, do me a quick favor and smash that like and subscribe button. It really helps us make more explainers just like this one. Okay, so to really understand where Palantir is today, we have to rewind the clock and look at where it came from. Let's set the stage with the old Palantir, the one that was famous for its mind-blowing growth, and this is a big but, it came with a very expensive catch. Now, what's just wild about this is the sheer velocity. I mean, nobody ever questioned their growth. Look at this chart. Revenue basically quadrupled in just 5 years. We're going from around $1 billion in 2020 to a projected $4.5 billion. That incredible top-line growth was the engine for everything that came next. But here's the flip side. For every dollar they brought in, it felt like they were spending two. In 2020 alone, they lost over $1 billion. $1 billion. And even as revenue shot up, the losses just kept coming for years. The biggest question on Wall Street was, can this business model ever actually make money? And then, in 2023, something clicked. You can see it right there on the chart. That's the pivot. They finally hit what's called GAAP profitability, and honestly, they haven't looked back since. Which, of course, leads us to the central question of this entire story. How? How did they manage to go from burning $1 billion a year to suddenly becoming this profitable, cash-gushing machine? And this brings us to the heart of the matter, the profitability flip. Now, this wasn't some happy accident. It was a very deliberate, carefully engineered shift in how they run the business. So let's break down exactly how they did it. So the first key was getting a handle on their margins. As you can see on that top line, they locked in their gross margin at a truly elite level, consistently sitting above 80%. What that means is for every dollar of software they sell, they get to keep over 80 cents. Pretty incredible. And that stability is what let their operating leverage finally kick in, pulling the operating margin, that's the red line, from a truly horrifying negative 107% all the way up to a positive 31%. That is a monumental, game-changing shift. And this right here, this just beautifully illustrates the second key, insane efficiency. Just look at their R&D spending in raw dollars. Those are the gray bars. It stayed remarkably flat, right around $500 million since 2020. But in that exact same time, their revenue quadrupled. That green line shows their R&D costs just collapsing as a percentage of revenue, from over 50% down to just 12%. They are literally innovating at a massive discount, getting way more bang for their buck. So with their margins totally under control and their efficiency just soaring, what did that actually do to the company's financial health? Well, let's move on to the new reality and see how they built this absolute financial fortress. All of a sudden, cash just started pouring through the doors. Free cash flow, which is really the lifeblood of any healthy company, it didn't just grow, it exploded. They went from burning $300 million back in 2020 to generating over $2 billion a year. The critical takeaway here is that they no longer need Wall Street's money to grow. They are a self-funding machine. And where did all that cash end up? Right on the balance sheet. I mean, this slide is just staggering. We're talking over $7 billion in cash against just a tiny $220 million in debt. They are so ridiculously cash positive, they could pay off their entire debt load more than 30 times over with the money they have on hand right now. That is what a fortress balance sheet looks like. Now, one of the biggest knocks on Palantir for years was its heavy use of stock-based compensation, which, dilutes existing shareholders. And this chart shows that, right after they went public, the share count did pretty much double. But look what's happened since 2021. The rate of dilution has totally collapsed. That curve has flattened out in a major way as the company matures and can rely on its own cash instead of stock. It's a huge sign of financial maturity. So the business itself is firing on all cylinders. It looks fantastic. But that brings us to the big question for anyone looking to invest today. What's the price for all this newfound perfection? And is it just too darn high? For the investors who saw this story unfolding early on, the rewards have been absolutely immense. I mean, yeah, there was a ton of volatility along the way, but Palantir stock has completely crushed the tech-heavy Nasdaq, outperforming it by over 300% in the last 5 years. The market has definitely recognized this turnaround and rewarded it big time. But here is the massive catch. The reward of the past creates the risk of the future. As this slide makes painfully clear, the stock is now priced for absolute perfection. You look at the PE ratio, the price to book, these dials are way into the red zone. If you're an investor today, you are paying a huge premium, and that means the company has to execute flawlessly. There is literally zero room for error. So let's bring this all together. Let's try to put a bow on it and come to a final verdict. How should we be thinking about the bull case versus the bear case for Palantir right now? And here it is, the entire story consolidated onto one slide. The bull case? It's crystal clear. You've got explosive free cash flow, expanding margins, and a debt-free balance sheet. This is an elite company. The one thing to keep an eye on is still dilution. It's slowing way down, but you gotta watch it. And the bear risk? It's really just one thing, but it's massive. That's sky-high valuation. Any little hint of a growth slowdown could seriously hurt the stock price. And that really leaves us with the ultimate question for any investor looking at this company today. We've seen the facts, we've looked at the data. What you have is an elite, top-tier company with a very premium price tag. Is it worth it? So what do you think? Is this premium price totally justified by the quality of the business, or is this thing a disaster waiting to happen? I want to know your take, so drop it in the comments below. And while you're there, let us know which company you want us to break down next. Thanks for watching.